Hello, trading is closed on December 23rd, 2016. We had some calls yesterday. We said the big drop was coming, but it wouldn't be today. We thought yesterday's pattern should lead to higher prices, but that this high should hold based on the wave count. And so far, all those things worked. We have pretty much an all-day rally here on a Friday before a holiday weekend. Almost always, when you return from a long weekend like that, the move continues, and if not, it has very ominous implications. The week between Christmas and the New Year is one of the most consistently positive weeks of the year because people have tax-inspired reasons not to sell. So if we drop here, when the sellers have all dried up, I shouldn't say all dried up, a lot of them have decided to take this week off, it's really pretty ominous. And calling for a drop here is really going against history and the calendar, but I'm going to do it anyway. We have some MEJT price targets slightly under where we closed. I think these will print and probably a lot more than that. Let's look at the reasons. We've now rallied nearly 2 days straight, and we haven't been able to take out this prior high. Here's your island reversal formation. You rally, 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 can't take out the prior high. It's not good. We could still gap up over this high when we reopen on Tuesday and kill the pattern. Let's go over why I think that won't happen. Here's your MEJT chart. You'll see how when we dropped here, the system called for a return to this bar, which we got. We now have a wall into the close, which usually is followed by a gap down. We also have a Hobson close, meaning the exact high of the day. It shows that retail customers who were unwilling to let us trade over the opening high all day long waited until liquidity dried up and then bought with abandon. These wrong way Corrigans aren't always wrong, but they usually are. Here's the wave count we have. If you hone in on it, we had this as the high of wave 2, and if you look at this will let me move it, I'll do it. If you look at a Fibonacci grid of wave 3, you'll see we closed right at the Fibonacci target, resistance I should say. If this is an ABC for wave 2 of this degree, and that's A, and that's B, wave C isn't quite equal to A, but it's awfully close. I don't want to go too much into other people's work, but tomorrow we'll have 180 days up. We have exactly 180 points up from this low to today's close. That is trouble. If you take today's high and close and draw the trend line in blue, you'll see a direct hit. I don't know why this gives me a hard time today. You'll see a direct hit right there. So we rallied right through a significant trend line. Let's back up a little bit. Here's your daily chart. This is a diamond on stilts. Here's one stilt. This is a split stilt. And we've shown how you can use consolidations to give price targets. You don't know which leg to use. But like if you take from here to here and set it at 50%, there is your price target. You can use the legs also. There's the leg up. There's the leg down. That's the same price. You can measure from this low and get the same low here. You can measure from this low and get this low. And what's significant about today's close is if you measure from that low, you get today's close right on the dot. I think there's a very good chance that this high holds. There's strong resistance. I think this high holds, and if so, we should drop right from the open and have a big drop. And if I'm wrong, it should be obvious right from the open, and that's today's call.